You know, in this business of trading, most people don't lose because the market is too mysterious or too difficult to interpret. They lose because their own perception makes it harder than it needs to be. Traders overload their charts with indicators and colors, cling to every opinion they hear, and then wonder why their results constantly deteriorate. Today, I want to talk about something most traders refuse to accept until the market extracts its tuition from them. A simple setup can outperform 95% of traders, not because it predicts anything better, but because it reduces internal conflict. And if you remember the previous video about the two confirmations every legitimate breakout requires, you'll immediately see how this fits into the larger framework. Because simplicity isn't just fewer tools, it's fewer psychological contradictions. Let me tell you something important. Simplicity in trading is not a lack of knowledge. It is a reflection of mental alignment. When you watch the markets long enough, you begin to realize that the clearest charts, the cleanest structures, and the most obvious levels tend to deliver the most consistent results. The amateurs chase complexity because they associate complexity with certainty. But real professionals, the ones who consistently extract money from the markets year after year, use the simplest methods and rely on a mindset grounded in discipline and probabilistic thinking. Ask yourself this the next time you see price-building energy beneath resistance. Do you truly need 5 oscillators to confirm what is already visually and psychologically evident? Or do you already sense that the path of least resistance is upward? I learned this the hard way early in my career. I wanted to feel clever. I wanted to outsmart the market as if it were a puzzle I could decode. But the market doesn't respond to cleverness. It responds to clarity, confidence, and a trader's ability to act without hesitation. A simple setup, one structure, one meaningful line, one trigger, one stop, can build extraordinary results when executed with unwavering consistency. But most traders can't do it. They'd rather scatter their attention across 10 trades a day instead of waiting for one that aligns perfectly with their plan. Tell me honestly, do you patiently wait for your setup to come to you? Or do you try to force the market into giving you something that fits your need for action? The truth is, simplicity feels uncomfortable to the human mind. We're conditioned to believe more information equals more control. But in trading, more information often produces more internal fear, more second guessing, and more hesitation. The market speaks clearly if you allow it to. Price shows you when buying pressure overwhelms selling, when momentum begins to expand, and when participation begins to weaken. You don't need to decorate the chart with noise. You simply need to perceive the information objectively. And perception requires discipline. That's the real edge. Discipline, not data, determines performance. Most traders cannot stay still long enough to perceive the market objectively. They jump from system to system, trying to reinvent themselves after each emotional setback. Every time they add a new tool, they lose a bit more clarity. That's why the trader who follows a simple process will always outperform the trader drowning in tools. While the crowd is hesitating, checking and rechecking signals, the simple trader already understands what they're looking for and they act. Let me ask you something. How often have you hesitated on a trade that moved exactly the way your initial read predicted? I don't believe in complicated systems. I believe in understanding how price behaves because price reflects collective human behavior. The market moves through cycles: expansion, contraction, accumulation, distribution. It isn't random. It's a visual representation of beliefs, expectations, fear, and greed. When you strip away noise, you begin to see opportunity where others see chaos. That's what simplicity provides. It aligns your perception so you can respond to what's happening instead of reacting to what you fear might happen. And remember what I said earlier about confirmation. Every real breakout needs two forms of validation. That same principle applies here. You don't need 10 validations to justify a trade. You need two, one from the price action itself and one from your internal conviction. The rest is simply fear disguised as analysis. Simplicity doesn't mean laziness. It means planning in advance, so you don't have to think during moments of pressure. When the market opens, your decisions should already be predetermined. Your levels should be marked. Your expectations should be aligned. When price enters your zone, you don't think. You follow your plan. That's what separates a disciplined trader from a gambler. Gamblers improvise, traders execute. Trading is not meant to be exciting. The more you chase stimulation, the more your account bleeds. The more you crave clarity, emotional neutrality, and consistency, the faster your results improve. It mirrors wealth building in every domain. The person who compounds with a simple, repeatable edge will always outperform the one swinging for home runs. Your trading capital is your resource. It must be deployed logically, not impulsively. You wouldn't send soldiers into battle without a strategy. So, why do traders open positions without a clear setup? A simple setup gives you rules you can trust. You know your entry, you know your stop, you know your objective. There is no emotional negotiation. Either the market aligns with your plan or it doesn't. When it doesn't, you step aside. No drama. But when it does align, you ride the move with confidence because you've seen the pattern unfold repeatedly. Repetition builds belief. Belief builds consistency. And consistency keeps you in the game long enough to grow. Most traders never stay long enough to learn this lesson. They keep changing systems, chasing magic. But the magic is already present in the simple repetitive behaviors that build confidence. Clean breakouts, pullbacks to structure, genuine volume participation. The rest is psychology. Your patience, your risk control, your ability to let winners run without sabotaging them. These aren't mechanical tasks, they are psychological skills developed through experience. Every time I simplified my approach, my results improved. Every time I tried to outsmart the market, it humbled me. Eventually, I stopped trying to be brilliant and focused on being consistent. And consistency is born from repetition, not reinvention. Traders fail not because they lack knowledge, but because they refuse to master what they already know. Think about that. Are you collecting setups or perfecting one? The market doesn't care how many strategies you've studied. It only responds to how consistently you execute your own plan. And execution improves when your rules are clear, minimal, and deeply understood. This simplicity becomes your foundation. A simple plan is easier to trust under pressure, and trust is essential when the market becomes volatile. When candles move rapidly, when price snaps unexpectedly, when your heart rate spikes, you don't have time for complex thought. You act according to your preparation. If your plan is simple, you act with confidence. If your plan is complicated, you hesitate. And hesitation, not the market, is what destroys traders. When I talk about pressure in trading, I'm not referring to ordinary stress. I'm talking about watching your money fluctuate in real time, confronting your deepest fears about loss, validation, and control. Every tick tests your belief in your system, and this is where the simplicity reveals its power. When your plan is simple, you remember the exact reason you entered the trade. The logic stays crisp in your mind. But when your system is tangled with filters and conditions, it collapses under the weight of uncertainty. You can't recall all the reasons you entered. You begin to doubt. You modify stops, shift targets, override your rules until the trade falls apart. A trader with a simple, clear plan has already done the emotional heavy lifting before entering the trade. They know what validates the setup and what invalidates it. There is no gray zone. This clarity protects them from emotional sabotage. When emotion steps aside, execution becomes natural. Trading is not about predicting the future. It's about managing your behavior and interpreting the market's behavior without distortion. A simple plan is the tool that enables this. It provides a script during moments of chaos. Think of a pilot flying through turbulence. He doesn't invent new procedures mid-flight. He follows a checklist he has internalized. The checklist is your setup. The rules are your instruments. Follow them and turbulence, market volatility, loses its psychological threat. I've seen countless traders lose everything, not from lack of skill, but because their systems disintegrated under pressure. Too many signals, too many exceptions, too much confusion. They didn't know what to trust when the market moved fast. Simplicity eliminates that uncertainty. It reduces each decision to one essential question: is the setup valid or not? That's it. You act or you don't. No hesitation, no overthinking. The fewer real-time decisions you make, the more consistent you become. And consistency is what grows accounts. Remember what we discussed about the two confirmations real breakouts need. The same psychological logic applies universally. You don't need endless validation. You need just enough to create internal conviction. When your plan revolves around clear price behavior and a small number of confirmations, you don't flinch under pressure. You know what you're seeing. You know when you're right and when you're wrong. That inner certainty is what allows you to remain objective. When pressure rises, your mind seeks something to anchor to. If your system is complicated, there is no anchor, only cognitive overload. But if your plan is simple, your anchor is obvious. You trust it because it has proven itself repeatedly. That's what allows a trader to remain calm when others panic. Trust doesn't come from hope. It comes from experience, repetition, and clarity. And clarity lives in simplicity. When I traded too many strategies, I lived in a constant state of doubt. Every losing trade felt like evidence that I needed a new approach. But when I stripped everything down to price, volume, structure, a simple framework, everything became easier. I no longer debated whether signals were valid. They were either present or they weren't. This allowed me to execute even on emotionally difficult days. That's the beauty of a simple plan. It makes you reliable, not perfect, but stable enough to stay in the game long enough to grow. Market pressure will always exist. News spikes, fake outs, sudden reversals, these are part of the environment. But when your process is simple and grounded in psychological clarity, pressure loses its influence. You stop wasting energy interpreting noise. You follow your blueprint, take the trade, manage your risk, and move on. That's professionalism. That's how trading transforms from a source of emotional stimulation into a structured business. Because in a business, you don't react impulsively. You act according to a framework you've internalized. The truth is no trader can eliminate pressure from this game. Pressure is built into the nature of uncertainty. But you can eliminate unnecessary psychological clutter. The fewer moving parts in your plan, the fewer internal conflicts arise when volatility hits. You don't need to impress the market with intelligence. You need to behave consistently with confidence that comes from a simple plan executed well. When your plan is simple, your mind is free to focus on what matters most: execution. You don't win in trading because you predict the future more accurately. You win because you manage yourself effectively when the market moves against you. And the trader who operates from a simple plan always handles adversity better. He trusts his edge, not his momentary emotions. He acts the same whether he's up or down because his behavior is anchored to structure instead of the outcome of a single trade. That's how a small, repeatable setup becomes a reliable wealth-building engine over time. And that's why simplicity is not weakness. It's the strongest foundation you can stand on when the market begins to shake, and everyone else drifts into doubt and emotional reactivity. Every trader craves confidence. They want to sit in front of the charts feeling calm, decisive, and in control. But that kind of confidence doesn't come from adding more tools, adopting a new strategy every week, or constantly modifying your approach. It comes from repetition. The same process done the same way over and over until it becomes part of you. It comes from seeing your setup unfold hundreds of times until the pattern, the movement, the behavior becomes ingrained. That's how you build trust in your system. Trust in your ability to execute and trust in your capacity to stay composed even when price moves against you. Reinvention, on the other hand, destroys that trust. Every time you adjust your method out of fear or impatience, you reset your learning curve. You return to beginner mode without even realizing it. And in trading, restarting over and over creates no real progress. The market rewards the trader who gives his edge enough repetition for true understanding to develop. Think about that. How can you expect conviction in something you won't allow time to mature? You can. Most traders fail not because their strategy lacks potential, but because they abandon it before they experience its probabilities across a meaningful sample size. 2 losses and they scrap the method. They start modifying, tweaking, adding filters, removing signals, telling themselves they're improving the system. But what they're really doing is erasing the consistency that creates confidence. They're chasing emotional comfort instead of statistical understanding. Have you noticed how when you finally discover a setup that works, your mind immediately tries to optimize it with new additions? That is not wisdom, it's ego. The ego resists simplicity because simplicity forces accountability. Confidence in trading is built the same way a craftsman builds mastery through repetition. A blacksmith doesn't become skilled by forging a different object every day. He becomes skilled by hammering the same material the same way thousands of times until he understands every nuance. A trader's craft is no different. The more you repeat one setup, one set of conditions, one structured process, the more instinctive your execution becomes. You start recognizing shifts in the environment faster. You start sensing when something feels off before it's visible on the chart. That's not luck. That's not intuition. That's deep familiarity created through deliberate repetition. But most traders are too impatient to reach that level. They confuse boredom with inefficiency. They chase stimulation rather than mastery. They want every day to feel new, exciting, adventurous, so they reinvent themselves weekly. This week it's breakouts. Next week's scalping, then swing trading, then algorithmic concepts. Constant reinvention feels productive, but in reality, it resets their progress to zero every time. They remain trapped in a cycle of false starts. They think they're evolving, but they're only spinning in psychological circles. Confidence cannot survive in that kind of inconsistency. How can you trust yourself when you don't even trade the same way twice? A professional doesn't crave new setups. He seeks a deeper understanding of the ones he already uses. He studies them until he knows their behavior across trends, ranges, volatility shifts, news environments. He knows how and why they fail, how they behave under pressure, and what market conditions enhance their reliability. That's mastery, and mastery is not the result of exploring everything. It's the result of exploring one thing deeply enough to understand every layer of it. Repetition gives you data. It gives you context. It gives you experience you can rely on when the market surprises you. Reinvention gives you confusion. It keeps you guessing, doubting, and emotionally unsteady. Remember the earlier video about the 2 confirmations every legitimate breakout needs. This ties directly into that principle. Once you define your confirmations, you don't replace them every week. You observe them again and again until you can identify them subconsciously. That's how conviction emerges naturally. Not through invention, but through recognition and familiarity. Repetition also shapes your emotional landscape. When you've seen a setup unfold 100 times, your nervous system no longer interprets normal volatility as a threat. You understand the rhythm of pullbacks, fake-outs, retests, and consolidations. You know the difference between noise and true invalidation. That knowledge brings calmness. You stop panicking. You stop overreacting. Confidence isn't arrogance. It's emotional neutrality born from repeated exposure. Most traders want confidence, but avoid the repetitive work that produces it. They want immediate mastery without the grind, but the market punishes impatience. Every trader who has ever succeeded has done so through repetition. Their setups aren't overly complex, but they are deeply ingrained. That's why they don't freeze under fast-moving conditions. They've already lived those scenarios many times. With every repetition, you gather feedback, subtle details you could never learn from a book. How your setup behaves during news events, how price reacts around key levels, how volume shifts before momentum expands. These nuances shape a quiet, unshakable confidence. A confidence that doesn't collapse after a losing streak because it's grounded in hundreds of trades, not in a single outcome. When you understand probabilities, you stop taking losses personally. They're expected. They're built into the game. Reinvention keeps you fragile. Switching systems erases the knowledge you've already earned. You become a beginner again with no data, no pattern awareness, no emotional history with the setup. You may catch a few lucky wins, but the moment pressure arrives, you crumble because you haven't repeated the method enough to believe in it. That's why so many traders run in circles. They chase new methods, not because their old one is flawed, but because they haven't yet built the confidence that repetition provides. Mastery only comes from committing through the discomfort. You don't gain confidence by discovering a perfect system. You gain confidence by deeply understanding your imperfect system. You learn its rhythm, its strengths, its limitations. You can only achieve that through repetition. Every repetition builds not only skill but belief, and belief is the backbone of confidence. Without belief, you collapse under pressure. With belief, you execute without hesitation because you've proven your edge to yourself across countless trades. Confidence built on repetition is stable, not emotional. It doesn't depend on your most recent trade. It depends on the cumulative experience behind it. That's why great traders always say the real challenge is mastering yourself, not the market. And self-mastery is born from repeating your edge until it becomes part of your identity. Simplicity in trading creates consistency, not limitation. Most traders hear the word simple and interpret it as basic or unsophisticated. They believe complexity equals intelligence, that the more tools and thoughts they add, the more accurate they'll become. But the true sophistication lies in refinement. Simplicity isn't the absence of complexity. It's what remains when unnecessary complexity has been removed. The trader who keeps his method simple isn't oversimplifying, he's purifying. He's eliminating noise until only truth remains. And that truth repeated becomes consistency. Every consistently profitable trader eventually reaches the same understanding. The simpler the approach, the steadier the performance. Not because markets reward simplicity directly, but because simplicity eliminates confusion. It narrows your focus to the variables that actually matter, and when your attention is focused, your execution becomes consistent. You stop reacting emotionally to noise. You stop chasing everything that moves. You begin acting only when conditions align with your well-defined edge. Tell me, how many times have you added an extra indicator just to feel more certain? And how often did that extra confirmation truly deliver clarity? Complexity seduces because it creates a false sense of control. More data makes you feel safer. More analysis makes you feel smarter. But the market doesn't reward feelings. It rewards objective decision grounded in clarity and discipline. Simplicity forces structure. It removes excuses. When your rules are simple, your results reflect your behavior directly. You cannot hide behind a complicated system. Your decisions are transparent, measurable, repeatable. That's what produces reliable performance. Simplicity breeds consistency because only simple systems can be repeated flawlessly. You can only execute something the same way every time if it is clear. When your setup is clean, every trade becomes part of a statistically meaningful series. Each win or loss contributes to understanding. You can refine it, improve it, trust it. But when your process shifts trade to trade, your outcomes become random. And you cannot build anything meaningful on randomness. Trading is a probability game, and probabilities only work when applied consistently. Think of it like this. If a casino changed its rules every night, it would collapse. The house wins because its edge is consistent. The trader must think the same way. When I was younger in the market, I made the mistake countless traders make. I assumed every losing streak meant the system was flawed. I abandoned methods too quickly. Each time I replaced one approach with something that looked more sophisticated. The new strategy worked briefly, just long enough to give the illusion of improvement. Then the losses returned and the cycle repeated. It took years to realize the problem wasn't the strategy. It was my lack of consistency. I never gave any one setup enough repetition to prove itself. When I finally simplified and committed to one clean structure, everything changed. I stopped trying to trade every type of movement. I focused only on what I understood intimately. My results stabilized because my behavior stabilized. A simple plan creates emotional consistency as well. When you know exactly what you're looking for, doubt disappears. You don't need 10 indicators to justify your actions. You recognize your conditions and you act. And the more you repeat that cycle, the calmer and clearer you become. Confidence doesn't grow from complexity. It grows from clarity. And clarity only exists in simplicity. Let me ask you, do you trade better when your screen is clean and your plan focused, or when you're drowning in analysis? Remember that earlier video about the 2 confirmations a real breakout needs. The same principle applies here. When your approach is simple, you know exactly which confirmations matter. You aren't chasing endless signals. You've defined what enough looks like, and that definition is the backbone of consistency. Complexity tries to solve uncertainty through more information. But in reality, it often multiplies psychological conflict. Simplicity acknowledges uncertainty and puts your energy where it belongs, controlling your actions, not the market. Because at the end of the day, simplicity forces honesty. It removes places to hide. Either your setup was there or it wasn't. Either you followed your plan or you didn't. There's no gray area, no justification, no story you can tell yourself to rewrite what happened. That level of honesty is uncomfortable in the beginning, but it's also incredibly freeing. It's the doorway to real growth. When your process is simple, you see precisely where your behavior broke down, and that makes improvement possible. But when you hide behind complexity, every loss becomes ambiguous. You never know whether the trade failed because of a normal probability distribution, or because you made an emotional decision. And when you can't diagnose your mistakes, you are guaranteed to repeat them. A simple system doesn't mean it's easy to follow. It means it's unmistakably clear, and clarity exposes discipline or the absence of it. Many traders avoid simplicity because clarity removes places to hide. With 10 indicators on your chart, you can always rationalize your decision. With one clean approach, responsibility falls directly on you. That's why simplicity is so powerful. It doesn't just create consistency in outcomes, it creates consistency in your behavior, which is the real source of profitability. And here's something traders rarely realize. The simpler your workflow, the easier it becomes to adapt when the market environment changes. Complexity traps you when you depend on a network of interconnected indicators. A single shift in volatility or liquidity can break the entire structure. But when your method is grounded in raw market principles, price, structure, trend, momentum, you naturally shift with the flow. Simplicity gives you fluidity. It makes you resilient because you're not anchored to rigid formulas. You're reading the underlying behavior that has existed for decades. Markets evolve, but human psychology doesn't. And price is nothing more than psychology expressed visually. In the end, consistency isn't built on perfection. It's built on the repeated execution of simple, high-quality decisions. Every clean, disciplined trade reinforces self-trust. That self-trust compounds just like your capital does. The more consistent your actions become, the more confidence you accumulate, and the less the market is able to shake you emotionally. Today, simplicity keeps you centered. It reminds you that trading isn't a game of being right. It's a game of executing well over a large enough sample of trades. And that level of steady execution can only come from a process simple enough to follow, even when your emotions are pulling you in every direction. Complexity creates confusion. Clarity creates conviction. Most traders don't lose because they lack intelligence. They lose because their mental filters distort what they're seeing. Their charts are cluttered, their thinking is scattered, and their emotions drown out their logic. The market itself is not as complicated as most interpret it to be. Price only ever does three things: rise, fall, or consolidate. That's it. Everything else is a layer of interpretation added by the trader. But most traders bury themselves in filters, opinions, predictions, and overanalysis until they forget what they were even looking for in the first place. Complexity doesn't increase accuracy. It increases hesitation and uncertainty. Clarity slices through that noise. Clarity gives you the confidence to act when others hesitate. When your rules are simple, you know exactly what qualifies as a setup, what disqualifies it, and when to stand aside. You know where your stop belongs and what level of risk you're carrying. You know the conditions that must be present before you enter, and the exact moment the trade becomes invalid once you're in. That type of structure comes not from complexity, but from simplifying the process until only the essentials remain. Ask yourself this when you've hesitated on a trade. Was it because you lacked information or because you had too much? Traders often mistake analysis for control. They think more data equals more certainty. But the truth is, the more inputs you try to juggle, the more internal conflict you create. Each additional variable adds another reason to doubt your decision. One indicator says buy, another says sell. A news article contradicts both. Suddenly, you're emotionally paralyzed because certainty feels impossible. That's the effect of complexity. It freezes you, and paralysis is expensive in trading. The market doesn't wait for you to achieve perfect clarity. It moves with or without your comfort. Clarity, on the other hand, gives you direction even in uncertainty. It doesn't mean you know what the market will do next. It means you know what you will do next. You're not trying to predict. You're prepared to respond. When you operate with conviction, hesitation disappears. You take the trade not because you're convinced it will win, but because it matches your criteria, and you trust your system over your emotions. That is real trading confidence, the kind rooted in structure, not in trying to be right. When I started, I believed the opposite. I honestly thought the more signals I stacked, the more confirmation I gathered, the better my results would be. I assumed confidence would come from certainty, from finding perfect alignment among indicators.